Good morning. I still have a cold, but I already lost 8% yesterday on this stock, so I better cover it right away. This is TSL. Let's start by the charts. Well, we cannot do a very extensive technical analysis on this chart because the IPO was just in December 2006. So this is a very recent stock, and it looks like it is developing a symmetrical triangle pattern, and if it breaks out above this it will be really bullish, but the chart is bullish. Look how the 50 days moving average is starting to form here. Technical overview. TSL is a recent IPO stock, so there's not much technical analysis we can do. Let me just say the stock is within a symmetrical triangle formation with support at 40.43 and resistance at 49.26. But this where is the chart? This is coming down, the resistance, and the support is going up. So eventually the stock will have to decide to go north or south, I believe. Well, we'll just see about that. Fundamental analysis. This is the share count. Well, we just have one count, which is, it's not 22, it's 21.7 million American depository ADS, and the current market cap is $987 million. The market cap increased 74% since the IPO. This is the balance sheet. I just have this data, and the current ratio is now 2.25, which is acceptable, and long-term debt is $95 million. As for revenues, we have some more data here. They were 27 million in 05, 115 million in 06, now expected for 07, 285 million, and for 08, 576 million, so very strong growth here. Gross margin, it was 23% in 05, 27% in 06, and I'm expecting 28 for 07 and 29 for 08. Expected 2007 revenue growth for TSL is 148%. For an American competitor, STP, a much larger company, more than $5 billion market cap, it is expected to grow revenues by 77%. It's also a solar play, quite similar to TSL. Gross margin for TSL in 06 was 27%, and for STP it was 25%, and the price to sales ratio is 3.46 for TSL and 5.17 for STP. So TSL looks more attractive in all fronts here when compared to STP. This is earnings per share. They were 32 cents in 05, 96. This is not per share but per ADS. 96 cents in 06. And they are estimated to be 1.66 in 07 and 3.59 earnings per share in 08. Estimate net margin will remain at about 10% going forward. Average annual earnings per share growth for TSL has been 83% and for STP 58%. But net profit margin for TSL is just about 11%, and for STP it was 17.7% in 2006. So STP looks to be more efficient. Price to earnings ratio, considering 07 estimates, so this is a forward earnings multiple. For TSL 27.4 and for STP 32.7. Fundamental overview. Usually recent IPO companies dilute shareholders' value, so I'll have to consider a 3% average annual dilution rate for my long-term estimates that we'll do in a minute. Balance sheet is okay. Revenues are growing extremely fast, 148% increase expected for 07, and 87% of revenues come from Germany alone. So almost 100% of their revenues come from Europe. Now they're going to expand to the US, and their internal. This is a Chinese company, so I believe when they start selling for their own country, this can be really an incredible growth story going forward, because they're selling for just almost all of it for Germany. They just have to expand geographically to achieve phenomenal revenue growth. Price earnings ratio at 27 doesn't seem that high considering growth, but we'll see that at long-term estimates. Okay, let's do that now. Long-term estimates. I estimate revenues will grow at a 50% average annual pace for the next 10 years. They're growing what was it? Let me see here. From '07. In '07 they're expected to grow 148%, and I'm expecting on average for the next 10 years for revenues to grow 50%. I believe it's quite possible. And net profit margin will be about 10%. Well, I'm not sure here. It can be more, it can be less, because price per unit sold is going down. But also, as revenues grow, the costs on administrative costs go down as a percentage of revenues, as well as interest costs and other costs. So I'm not sure about this number, but I'll bet on 10%. Given this, the company will have revenues of 16.4 billion in 2017 and net income of 1.64 billion. Apply an average 16 times earnings multiple and get us 26.3 billion market cap in 2017. Given these estimates and the 3% dilution rate, I expect a long-term return on investment of 35% a year on average for TSL, which is very attractive. I look for at least 16%, so 35% is really awesome for a return on investment long term. So my rating on a 1 to 10 scale is 9. Thank you, bye.